My name is Josh, and this is the Built for Wealth podcast, a millennial's no BS guide to financial freedom. In this podcast, we are interviewing investors from all different spaces and backgrounds and gaining insights on just how they built their wealth through real estate that hopefully leaves you inspired to build yours. You can follow along at builtforwealthpodcast.com. And without further ado, we'll jump right into the show. All right, we got Avi Rasowski on the podcast today.
You nailed it.
I nailed it. Good. Mike Wazowski. Been looking forward to having you on here, actually. I know I only reached out to you last week, but you've definitely been on the list.
Oh, thank you very much.
To come and talk. But yeah, you've been an OG in the area for some time.
I don't know.
Would you categorize yourself as
No,
that?
definitely not.
No?
I've only been here since 2019, so I'm like,
okay.
I still feel like a rookie, but
yeah. But I would, there's some level of credibility that you get when your track record is like owner financing. It's more complicated than just wholesaling, you know?
True,
so
yeah.
there's always like a little bit of like an elevated status because like this guy must be smart because he can do deals like that.
I fooled everyone. Yeah. Yeah. Thank you. No, I love owner financing. It's been great to me.
Good deal. We'll dive into that. But before we get there, who were you before you started investing in real estate?
So before starting, my wife and our 3 kids and I, we lived in Houston, Texas for about 9 years and moved to Charlotte in 2019. But before that, I was, I played minor league baseball after college.
Oh, nice.
Because I didn't want to go get a real job. So I played a kid's game for as long as I could. And that was mainly in Florida, played in Carolina and New York as well. But I was a bottom of the totem pole minor leaguer with the Marlins. Yeah. So after that, went to go get a corporate sales job because that's what athletes do. Mm-hmm. Go sell or start your own like baseball facility. But I didn't want to do that. So I worked for a company called Gallup. Have you ever heard of the Gallup polls? Mm-hmm. Okay. So I worked for Gallup for probably 6 or 7 years, and I was selling. So they're famous for polling and public opinion polls. I was selling consulting services based on polling inside corporations. So we would go in and meet with the executives of Fortune 500 type companies and basically do employee surveys and customer surveys and then tell them what the data is suggesting. So, hey, here's what your customers do. Here's what your customers want you to do better. And here's how you can become more profitable. Here's why your employees hate working for you and what you can do to improve and all that. So
interesting.
So that was fun. Sold some deals. And then one of my realizations was like, wait a second, I'm only getting, not as much as I think I should be getting for commissions on sales deals. So I went to try to go build my own business and kind of muscled my way through that for a few years and then found real estate. And we can certainly get into specifics.
Yeah. Were you crunching any of the numbers or were you just selling the consultant?
Just selling. So so I had to be aware of what we were selling and what the data was saying. But yeah, let's say I would go I was in Houston, so an oil field service company might have a set of customers that are buying pumps and valves and whatever equipment for the oil field. And we would interview the customers. And so I would be telling the executive, hey, here's what your customers, here's what you don't know about your customers. Here's what we can tell you that your customers are, are thinking and feeling and willing to spend more money with you if you know these things. And then we would have a whole team of operations people that would run the data. Yeah. And then I'd go try to sell the next deal.
You ever see the movie The Big Short?
Oh yeah.
When I think it's Ryan Gosling, he's he's trying to sell and he points at the Asian guy and he's like, look at that guy.
Yes.
What do you see about him?
And he's like, I'm actually not.
Yeah, right.
Yeah.
That's so funny. You were the sales
Great
guy
scene.
in that scene and you're pointing at the calc. I don't know what they call them. Something like that.
Yeah, exactly.
That's awesome.
Yes.
What was your business that you started?
So in 2014, I got fed up enough with working for somebody else. I was like, all right, I got to start something on the side. And so I was working a corporate job for a couple of years while I had a marketing business. So I was doing lead generation for basically small business owners. I would build little mini websites, and there's still people selling this model now, but build a little website for a roofing company or any kind of local business, HVAC. I still have a guy that sells shipping containers like locally in Houston. So website would say, roofing repair near me in whatever little town. I would buy a phone number from CallRail, for example. Yeah. And CallRail, if anybody doesn't know, is just like you can rent a phone number. And on that website, it would have my number. It's my website. And then I would send those phone calls to a company that wanted more business. And this is sort of, I mean, everyone pretty much has a website and social presence now, but in 2014, it was like, you'd run across people that had no website. They're just running around town. And so they were like, yeah, I'd love more phone calls. And so I would basically set up an agreement with them. If they liked the business, they say, hey, yeah, these calls are working. We're getting deals.
Yeah.
They would either pay me per lead or per sale or just like a flat fee per month. So I did that for a few years, and it was essentially just trying to find what niche was the best. So it's like, all right, a carpet cleaner is only making, let's say, $200 on a deal. They're not going to be able to pay me that much. But a roofing guy might make 10, 15 grand, and he's going to cut me a $1,500 check. That's better. So I was always in search of the best niche to target. And one day I think I saw like a We Buy Ugly Houses billboard. I'm like, all right, let me see if I can find like who these people are. And I knew nothing about real estate investing at all. And I called a guy and I said, hey, I can probably get you leads for sellers, but is that something you'd be interested in? He said, yeah, absolutely. I said, one thing I don't understand though is you're buying the house. How do you actually make money? And so he said to me, well, I don't buy the house myself. I just get it under contract and then I go market it to someone that has the money that can buy it. And so he explained to me what wholesaling was. I was like, oh, wow. So I kind of learned that. And so I started wholesaling shortly after that. I joint ventured with him a little bit and then I wholesaled for a few years and did a bunch of deals until somebody hit me upside the head enough times, was like, you need to keep these deals. And then I learned the owner financing model, which is primarily what I focus on now.
So was that in Texas where you were at?
That was in Houston. Yeah. So but I wasn't actually buying in Houston. I was doing what I would refer to as like a spray and pray method. So I would go Google ads the whole country. And at that point you could get really, really cheap leads. We were getting like $5, $6, $7 leads. Wow. But all over the place, Alaska, Ohio, Texas, Missouri. Like I still have some random deals in Kansas and Oklahoma from those leads. But I would get the deal under contract all remotely. Essentially what I was getting was like the scraps that nobody else wanted to pay for on Google. So these like outerlying towns where there's really not good economics. And so I thought they were good deals but they're cheap, but they weren't great deals. Yeah. So it's like, all right, you're paying $6,000 for a house in Cordell, Oklahoma, but it's only worth about $5,000. So it's like, it's not. It wasn't a sustainable strategy. Yeah. So I was trying to wholesale them, and then eventually, like right around the time we moved here in 2019, was when I was really more focused on owner financing.
So what was appealing about the owner financing model versus just wholesaling?
So number one is you can make just as much money up front, which I didn't see at first, because you can make just as much money on a down payment, and you have the ability to make essentially two other paydays, which is the monthly check from which we can get into the spread between what I'm paying versus what I'm collecting, and the back end equity, which is probably the largest part of the whole thing. Yeah. So I have a good friend named David Alexander, who I interviewed a few months ago I have a podcast as well. And he was one of my biggest influencers to tell me, like, look, his question to me is, why would you ever sell a property at a wholesale price when you could sell it at a retail price? And it didn't make sense to me at first, but I was like, okay, I think I get it. And he's like, you don't have to sell to an investor, basically. If you're wholesaling, let's say you get a deal for $50,000, you sell it for $60,000 to an investor. Well, that investor is going to go maybe fix it up and retail it out. He's like, you can go sell it to a retail buyer, maybe who don't fix it up though. So sell it for a little bit less and sell it to somebody that can't necessarily qualify for a bank loan on the pretty house. Yeah. So anyway, I had to see over that hurdle of, I'm not going to get a check at closing. I'm going to actually have to pay for a house at closing, typically, sometimes not. And then once I realized, okay, the down payments on these deals are actually just as much, if not way more than a wholesale deal, I kind of saw the light, and that led into a whole other path of trying to find private money and realizing that, yes, I should just figure out a way to buy these deals. Yeah. And so it all comes down to how affordable is it to get the deed in your hand? And so can I take it over subject to, can I get it on terms from the seller, or can I use a private lender if it's cheap enough? All that stuff to ultimately get to the point where I'm getting a down payment, I'm getting monthly, and then I'm getting a back end.
There's a lot more moving parts involved in it. It's a lot more complicated than just wholesaling.
For sure. Yeah. It's you have to understand the basics of a financial calculator. So it's like, instead of just like one static price, you buy it for this and sell it for this, and you have expenses. This is more, okay, well, what is the loan amount that you're going to, we're backing up from, okay, the end game is get an owner finance buyer. Mm-hmm. What's the price? What's the down payment? And then there's the financial calculator piece, which is there's 4 elements to it.
Yeah.
It's the loan amount, the interest rate, the number of months, and the monthly payment. So once I sort of began to understand that, I was like, oh, okay, it's all an arbitrage play at that point.
Yeah. There's probably a lot of people that would prefer that upfront cash from the wholesale versus the delayed gratification.
For sure, yeah.
How do you differentiate between like what's something that you want to wholesale versus keep long term?
I always start with owner financing now, because let's say I want to sell something, but the only reason to wholesale is if you need the money right now. That's my view, is why, because again, why would you sell it for a much lower price? So I'm always starting with the price that I think an occupant wants to pay. Mm-hmm. So let's say houses in the area rehabbed are $200,000, but this one needs $30,000 in work. We might only sell it for $170,000, $180,000, somewhere a little bit less than retail.
Yeah.
If it's livable. I mean, I'm not going to go sell a fixer upper that's almost demo worthy for that. But if it's a house that just needs, new floors and paint and some love, then basically I'm going to start with that retail price, and then I will wholesale it, quote unquote. I'm always going to take title to it, mm-hmm. but I will sell it for cash is what I would say. But I'm starting with the higher price, so that I'm not going to go sell it to a shark. I'm going to sell it to somebody who's like, well, yeah, I've got some money laying around and I really want to get a rental, and they're kind of like a weekend warrior.
Yeah.
That's where I'll sell it to somebody that may pay me a cash price that's lower than my asking, but it's still higher than a wholesale price.
Right.
If that makes sense.
Yeah, absolutely. Walk me through, like, what does a typical deal look like for you?
Okay. Typical deal. I'll give you, like, we just closed out on one that we got paid off on. Mm-hmm. This is not exactly typical, but for the market it's in, which is Lancaster, South Carolina, mm-hmm. These deals are possible. It was a very low price point. So we bought it for $14,000.
You bought a house for $14,000.
Yes. And if anybody wants to go to Lancaster or Chester, they're still out there.
Get out of here.
The more typical deal, I'll tell you the specifics on that one, but the more typical deals these days are like, let's say 50 to 100,000 for mm-hmm. the price tag.
Are these like mobile homes, or are they just single family homes?
Stick built. I mean, I have about a third of my portfolio is either double wides or single wides. Yeah. But the majority are stick built.
Interesting.
So the Lancaster deal we bought for 14 and sold it for 55. Mm-hmm. And the 14, it would have been fine cash too, but we ended up paying the seller $500 a month. And this was not my doing. I got it from a wholesaler, really good wholesaler that set it up on terms. And I was like, you should buy this yourself. But okay, I'll take it. $500 a month for 28 months, basically.
Wow.
And so that was the buy. And then the sale was $55,000 with $11,000 down, and so $44,000 on a loan. And that was only a 10-year note. And we got paid off in about a year.
Wow.
So, and I think the interest rate on it was like probably 10% flat. We're usually anywhere from 9 to 10%.
Interesting. I mean, why wouldn't you do stuff like that?
Right. So
how long was it? You said it got paid off in a year.
It got paid off in a year. The guy we sold it to was a flipper. He sold it for like $180.
Oh, wow.
So he made great money.
Yeah.
Yeah. It's one of those neighborhoods in Lancaster that's like turning, where you've got a bunch of old $20,000, $30,000, $40,000 houses, uh-huh. and then a bunch of $200,000 flips. So it's it's ripe.
Interesting.
That Chester's like that too.
How do you identify markets like that?
That one, I didn't identify that one myself. That was just this wholesaler was working that market. Mm-hmm. But when I first, so in 2019, 2020, 2021, I was and I still do this, but I was driving every direction outside of Charlotte looking for deals. And at first it came from Google. I was still doing Google. And so I'd get leads in random markets. Like I'd go to Gaffney and I'm like, all right, I don't know anything about this town, but I hope I don't get shot, and buy the house and go for it. And so I would learn just by chasing leads that would come in.
Yeah.
Then over the last few years, I've tried to get closer and closer to Charlotte. So I'm targeting Mecklenburg deals, and I'm targeting any county that touches Mecklenburg is great, honestly. But yeah, I think just understanding that there are deals out there. I mean, because you're looking at these deals too, is there are people out there that are in either situations where they need to get rid of it, whether it's a tax foreclosure or a bank loan default or anything like that, where they have a tight time frame. Or it's just someone that doesn't care about the property, if it's an inheritance or abandoned for whatever reason, out-of-state owner, which is, it's a whole other can of worms, which is motivated sellers.
I think I've said this before, but I don't think there's any one skill set that's been more beneficial to me in real estate than understanding creative financing, because it's created so many incredible opportunities to buy and to sell, to wrap, to do really cool stuff. You feel like Batman almost. Like
you do. Yeah. Well, it's funny.
I just did this.
Yeah. You're like, well,
Is
what's
this legal?
the highest return? Oh, I want to get, whatever return on an investment. And then you don't realize, like, if you actually just think about what you're able to do in creative financing is you literally put money out and then you can double it instantly within a couple of days and then get cash flow. So it's an infinite return, which is like, no investor is going to say that. They're going to be like, oh, go buy something that makes a good yield and this and that. But creative finance just breaks all the rules and says, well, you can actually double that today if you find the right deal, So it's amazing. And it's,
okay. So this one seemed like kind of like a one-off.
That was a one-off.
0% financing or principal.
Yeah. That's not every day. We try to do that as often as possible, but it's not, most people don't want to do that.
Yeah. So, if you were to wholesale that, what are you going to assign it for? $25,000, $30,000?
I would say it almost was a wholesale because 55 was an investor that bought it.
Yeah.
But yeah, if let's say I didn't want to close on it, I maybe could have wholesaled it for 35, 40.
But in the end, how much did you actually make on the whole deal when it was all said and done, including interest payments and everything? Yeah.
So our payment to the seller was $500 a month. Our note, I think I have to look at the calculator. I think we collected $581 and change for a 10-year note, 10% interest. And so we're making $81 on the spread, but remember the 500 is paying down all principal. And then the 581 is on a 10-year amortization. So at the end of 1 year, he still owed us $42,000 from the 44.
Yeah.
So we made $81 a month for a year, roughly. So call that whatever it is. And then another, at the time of sale, we owed the seller $6,000. I could be off on exactly the months, but I know we owed the seller $6,000 when we sold it. Which was basically 12 months left on the loan. And so I guess we had it for 28 minus 12 as we had 16 months into the loan. It was a 16-month deal. So we paid her $6,000 and we collected the 42. So take 6 off of that, we're 36 left. So we made, and this was all in a Roth IRA.
Yeah.
So it was,
that's cool.
Yeah, it was,
that's super cool.
I had a friend that showed me how to set it up correctly.
Yeah.
And so the entire thing went in all that profit was tax free.
Is what company do you use for your Roth?
It's called IRA Club.
Nice.
And that Travis Howard.
Yeah.
Travis turned me on to IRA Club, and they're great. I mean, the guy that owns their company or the guy that founded their company is like one of the leading minds, and I think he like wrote the book on IRA rules and things like that. So, I forget the name. I'll send it to you after.
Yeah. It's a pretty cool strategy to like wholesale and do creative strategies like this within your IRA because it just grows tax free.
Yeah, it's amazing.
Yeah.
Like, I'm like hooked on it. Like it's just a game to me now. Like, how do I grow it?
Yeah, that and being very strategic about that.
Yep.
And I need to be more intentional with mine.
Yeah.
I have a self-directed IRA with
Okay.
like equity trust.
Okay.
And it's been great to have it. My money was locked up for a couple of years in an investment that was just okay.
Okay.
Yeah. I finally got it back.
Okay.
And now I'm like, I got money to play with.
Nice.
So,
okay.
Yeah.
Yeah.
Now,
it is, though, back to your point about creative finance, it is, I've heard the saying, like, cash is the lazy way to buy.
mm-hmm.
So it's hard. I almost don't want to think I have money there.
Yeah.
There's a really well-respected owner finance investor named Mitch Steven in Texas.
Mm-hmm.
And he says, look, the best way to invest is he has people come to him like, hey, I got $100,000. How should I invest this? I want to buy real estate. He's like, okay, step one, forget you have that. And now try to buy while you're broke.
Yeah.
And because if I look back, my best deals were probably from when I really needed the deal.
Yeah.
And I didn't have any money to buy. So you got to get creative and be like, hey, I actually don't have any money to buy this. Here's what I think I can do. Got a few thousand up front, or, borrow from private lenders. But cash is the lazy way to buy. Yeah.
Okay. Tell me about your best owner finance deal that you've done.
The best one? Oh man. I'd have to look at exactly the numbers, but this one was up there. We bought a house actually in Gaffney for about $100,000.
Mm-hmm.
So it was about $20,000 to the seller, and he still owed about $80,000 on a loan. And so it was interesting. It was a 15-year loan that he had gotten, and he had just modified it. This is like right at the time where they're basically giving modifications to everybody.
Mm-hmm.
And with like no questions asked. So he modified it back in 2020. I think it was the end of 2020. So his payment was really low. It was like $700 or $800, and he only had maybe 13 years left on it. And the rate was like 3.25, something like that.
Nice.
So $20,000 out. I borrowed the $20,000 from a lender that I borrowed from several times. And it was a short-term loan. I said, hey, I think I can owner finance this with a decent down payment. I should have most of the 20 back pretty soon.
Yeah.
So we were in it for a little bit more than 20 because I had to pay interest and all that. I sold that basically just cleaning it out. We put signs out and marketed the deal, and we were flooded with buyers. That was the first weekend.
Wow.
I have to look back. I'm pretty sure this is like end of 2020, but I don't think COVID hit yet. So it might have been end of 2019, right before COVID.
Yeah.
And so we're at like literally in the midst of cleaning it out, and buyers are coming in, and I literally had a bidding war in the kitchen of the house.
Wow.
And this one couple was like, we really want it. We got 20,000 down, and they went to go get 10 out right away. And they're like, we'll give you the other 10 in a week or two. And I was like, and I gave them a handshake, and then somebody else came up an hour later. They're like, can we, they were still there. And they're like, can we do it? Well, we'll pay you more. I'm like, no, I'm not going to shake someone's hand and turn them away. And so they really appreciated that. They were like, thankful for the house. Their payment to me, they did a 15-year note as well. I convinced them not to, or I tried to convince them not to, I should say. Like 4 or 5 times. I'm like, just do a 30-year payment schedule. You can pay it on a 15-year note. And they're just stubborn about it. And so it is what it is. They paid $2,100 a month was the loan.
Wow.
$189 with 20,000 down.
Yeah.
And so whatever the numbers ended up being, it was about $2,100 a month all in with escrow. And they paid great for a while, for like probably 4 years, 3+ years.
Yeah.
And then the guy's business, he was in the trucking business, and took a big hit, and he'd be late on payments and then kind of ghost me. And I'm like, this is not good. And then he'd make partial payments. It was just constantly playing catch up.
Yeah.
And then he and his wife basically decided that, I won't get into the personal details, but they decided like, we can't do this anymore. And they sold it back to me. And I basically forgave a pretty large amount. They were behind several months. I also gave them some money at closing to buy the deal back from them, and then sold it. So essentially I gave them $10,000.
Yeah.
They owed me $175 at the time. So I'm, $185. They basically sold it back to me a little bit less than I sold it to them. And then I sold it. I put it out with owner financing after doing a little bit of cleanup and nothing major, but a few $1,000s worth of work. marketed it for $249, and it was, I bet you the ARV on that thing was like $320, like pretty nice.
Yeah.
And a guy came by, and he owned a couple of convenience stores. He's like, hey, I really want a house for my family. This is great. And so we were talking about like $245 with a pretty good down payment. I think he said 40,000 down, and he called me back. So we're like pretty good. We met, and then he called me like the same day or fairly soon after that. He's like, hey, I have a friend that may just give me all the money. Can I buy it for cash for less? I'm like, well, I'm thinking, of course, yes. And I'm like, yeah, but what are you thinking of numbers? He's like, well, you tell me. And I was like, I mean, it's still got to be around 240 probably. And he's like, yeah, that's what I was thinking too. Okay, let's do it. And because I thought he was going to hit me with like, instead of 245, I'll pay you 195.
Yeah.
Which I would not have done. And so 240, he closed it in like 2 weeks. And
wow.
So that was a nice one because we really weren't out of money. Like 20,000 out on the buy.
Yeah.
Immediately got most of that back on when we sold it. I was actually negative a little bit because I had to pay my lender more than 20.
Yeah.
And then cash flowed about $1,000 a month, a little bit more than that actually for 3 years. Then defaulted. So I was bleeding about $1,000 a month for 10 months, I would say.
Yeah.
And then a big payday at the end because we only owed $65,000 on the loan at that point.
That's awesome.
Yeah.
Wow.
That was a fun
like
one.
Making lemonade out of lemons.
Yeah.
Good
but
grief.
it's gone. It's like that. And there's the beauty of owner financing, which is like a deal like that. But now that deal's gone. It doesn't pay me anymore. It was a nice one while it.
I mean, imagine if you would have just wholesaled that in the beginning.
Right. I could have sold it for 120. And
you would have made 20,000.
Yeah.
And then in the end, you're probably like well over six figures.
60, 240 minus 60 is what is that? 180? Something like that.
Yeah.
So I think it was 170. It was the payday at the end.
Over the course of 4 years? 3 years, 4 years?
That was like 3.5.
Yeah. I mean, you capitalized on, you made money like at so many different ways with that.
That was a good return.
Yeah.
So they're not all like that.
Well, and then that was across like a really big market change too, probably.
For sure.
Like lots of appreciation.
Absolutely right. Yeah. And that's the other part that owner financing limits you on. I mean, there's so many amazing things, but
you're locked in.
I'm locked in.
Yeah.
I have a house. Someone owes me I think 250, 240, something like that. And it's actually in Texas. And that house is worth like 480 now. I'm like, oh my God, please sell it back to me.
Please default.
They actually are behind, but they're
really?
They're making good on their agreement, which is they're paying me weekly now to catch up. And so, I'm not in the business to throw people out. It's obviously they're making it work. And as long as they do what they say they're going to do now, it's crazy though. Just coming up with payment plans and kind of figuring out which whack-a-mole to tackle that day.
Yeah.
I could probably make more this month just fixing my portfolio problems than going to buy a new deal. So
really?
Yeah. So it's a challenge of like where to spend the time,
Yeah. So, I mean, that was an incredible deal. Surely you've got some losers.
Oh yeah. Yeah. I have a couple, I would say, a handful of losers. I mean, I don't think I've lost more than 20, 30,000 on any deals.
Yeah.
But yeah, and then I had one, that's not true. I had one, I'm about 35,000 out, and it's like messy title situation, which you know a lot about. Mm-hmm. And I don't think there's a real good play on it. And I'm just like, oh man,
you're stuck.
The only play right now is to partition sale it. And I would get a little bit. So it's like, go wait another 18 months.
Oof. It's a sunk cost.
So
fallacy.
it's not a loser yet.
Yeah.
It's losing right now, but it could turn into maybe get money back plus some.
Yeah.
But those are the challenging ones. Is you got the air situation where you don't really have the whole thing figured out. Mm-hmm. I've closed some that ended up working out great.
Yeah.
Where you have a partial in a deal and then partition it out or get somebody else to agree. But yeah, the toughest ones are the ones where you're like, all right. You get aggressive thinking you can get something done, and then it's like, no, can't find the other air, or you don't want to spend the time to partition it or whatever.
Okay, so this is more of I'm curious your thought process behind this. So we talk about like active income, you're flipping, you're wholesaling, you're whatever it is that you're doing to make money, like short-term money.
Right.
And then you have your passive income, like from rentals. and then you have like your long-term stuff from appreciation, right?
Yeah.
So with these notes, there is an end date on those.
Yep.
How do you determine, like, do you feel like this is just something you're going to keep doing, or is this a good like strategy to implement, or do you have like a balance in your portfolio? Like what's your thought process behind that?
Yeah. So right before we were recording, I was saying like one of the biggest problems I have is I don't have a forever cash play right now. Mm-hmm. I dabbled in a little bit because we just got a mobile home park that was sort of a connection from a referral in the past. And so that's nice. It's a long-term rental play where it could be a much longer play than an owner finance note. But to your point, yes, owner finance notes have an end date. There's a maturity date on the loan. They're typically never going to go that long. I mean, most of mine in 6 years of doing this. So my first owner finance note was signed December 2019. First payment was January 3rd, 2020. And so now we're 5 years later, 5.5 years later.
Yeah.
And I've had several people pay off. So even on 20, 30-year loans, something happens within that first 4, 5, 6 years where they either move or they're selling or refinancing or whatever it is. So yes, this is a great strategy that I absolutely intend to continue because it's a really great way to build up a portfolio without a lot of money. Mm-hmm. But there are definitely things I'm looking at in which I'm not fully into yet, but I'm looking at some commercial deals right now, and so I don't have experience in them yet. I've contracted a few deals, haven't closed them, but specifically single tenant retail commercial deals, where the idea is to line up a national tenant, create a triple net lease at the same time while buying a deal, and basically creating equity by lining up the right tenant.
Yeah, you're basically doing what you're doing, but with more zeros.
Exactly. Yeah. And triple net lease, in my opinion, is like owner financing on steroids.
Yeah.
It's like owner financing is kind of like a triple net lease because your buyer's paying you net of taxes, insurance, and maintenance. Mm-hmm. It's not a strong credit buyer, right? I'd rather deal with Wendy's or a corporation that's very strong that pays on time or early,
right? Versus
someone that's going to have a more of a challenge. So there is definitely risk in dealing with people that can't necessarily get a bank loan for a reason, right? Yeah. Their credit profile is not as strong as even an A buyer for retail.
Yeah. So looking back from where you started, did you have any limiting beliefs that held you back from the beginning, like knowing what you know now and then looking back from the start?
Oh yeah. I mean, I remember my first deal, my first attempt at a deal. It took me a few months to even try, but I was nervous to just put a contract in front of a seller because I was like, wait a second, I'd never wholesaled anything. What if I can't buy this house? I didn't want to sign my name on something that I couldn't buy. So once I got beyond that, then it was the whole, okay, well, I'm wholesaling. How do I get beyond the not getting paid at closing? I specifically remember the first deal that I kind of like shifted my mind on. That was a subject to deal. It was actually from a radio ad, which I haven't done that in years. Huh. It was a radio ad on one of the country stations in Union County at 93 something. But anyway, I tested it out. Most of the ads were losers. And then I got a call from a guy, and I think he was delinquent. I forget exactly. But when I walked into his house on Raccoon Run in Monroe, and this one, by the way, I should not have done what I did, but I'll tell you, I could have wholesaled it. So I got it contracted subject to, and I could have just wholesaled it out. I could have just said, okay, somebody else can take on this deal, but it was only $5,000 to the seller. Actually, he wasn't behind at all because it was just $5,000 to him, I'm pretty sure. And I was like, all right, I can do that. I think I can make that happen. So it was my first time ever not getting paid at closing. I had to pay for the deed, and I was like, okay, I was still in rush mode. I was like, I got to get paid right away. And I ended up finding a buyer. So we were in it for like 97, 98,000. And then the buyer came in at 140 with 30,000 down. And long story short, that house is worth 350 now. So I'm like, oh my God, what was I thinking? But I was still in rush mode. I was like, how do I immediately get paid? And I I probably sold it too fast. I didn't even clean out the house. There were floors falling through, which I'm not saying I would have done all the renovation, but I definitely sold it for less than I could have.
Yeah.
But that deal was funny because the buyer was a tree trimmer, and I would never do this again either. He would like tell me he has cash to pay me, and then he would just tell me where he's working that month, and I'd go meet him where he was doing his tree trimming job. So I'm like, oh, okay. He absolutely played me on like he was in charge of the relationship. So every now and then, he'd pay the regular amount, and then it was a 5-year note, and then some months he'd be like, hey, here's an extra 10,000. Here's an extra 5,000. And then one month his wife and him and his son were working on a big tree trimming job in Monroe, and he pulls up and he's like, come here. And he brings me over to the front seat of his car, and he gives me a Dos Equis. I'm like, okay, I guess this is going to be a big payday today. And he's like, he counts out $27,000 in a big envelope. I'm like,
oh my gosh.
Geez. I was like, hey man, I can't keep doing this. My bank's going to be asking me questions. And so when he finally did the payoff, he did a cashier's check. But,
yeah.
But that's the other thing about owner financing is you deal with more people with cash. You're like,
money laundering.
Yeah. You got to be. I mean, it's cool at first. You're like, oh my god, this is awesome, and then you're like, well, no, I need to make sure I have a track record of all this. I don't want to be dealing with cartel money and all that crap.
Yeah. So that brings up an interesting topic. Like, how do you stay compliant? Because I know there's all these like Dodd-Frank acts, like especially after 2008. There's
tons. Yeah.
How do you make sure that you're not doing predatory lending? Like how do you stay within those guardrails?
So there's more regulations than I could ever learn myself, right? So I try to be aware of what I'm doing and what possible risks there are. Mm-hmm. So yes, Dodd-Frank, if anyone is not aware of it, and the S.A.F.E Act, there's things you have to be aware of to make sure. The critical thing is to make sure that your buyer can afford to pay. Mm-hmm. So the ability to repay the loan is a big thing. So we do credit checks, we do a full profile, background, criminal history, eviction history, credit checks, and we check income. So we're doing that ability to pay sort of on our own right now. There's a company, I actually haven't used them, but there's a company that does it all for you.
Yeah.
It's a lot more expensive. And so it's like, if the buyer's willing to do that, we'll do that. The other thing we're doing is this is going to be, it's a rabbit hole. So just be forewarned. We're not actually selling real estate. We're taking title to the property in a trust, and then we're not selling the whole. Typically, sometimes we'll do a regular real estate deal. We'll sell it with a note and deed of trust, and then we get paid as a regular lender. Mm-hmm. But sometimes we'll keep the deal in the trust, and then we'll assign ownership in the trust to our buyer, and we explain it all at closing, and then they're just leasing the property from the trust the entire time. So it's actually just a rental with the agreement that you will get the deed in your name upon payoff. So it's a little bit of a hybrid where we're not doing a traditional real estate sale. So it's, I guess you could say Dodd-Frank and all those other traditional real estate lending restrictions don't really apply because I don't own the property. The trustee owns the property, and the buyer is just leasing it from the trust during the time that they have an option to buy it out.
Yeah.
So it's almost like a lease option. It's a little bit more complicated than that, but but yeah, there's certainly things that I have to be aware of.
What are some of the big no-nos? Like, this is like a huge.
Don't sell a house to somebody that got a $50,000 personal injury payday and they actually can't afford it.
Yeah.
Like that, know where the money came from and check what their actual income is and make sure it's a couple that's going to stay together. I've had houses that I've gotten back almost all the time. It's because the couple split up and they couldn't afford the house after.
Yeah.
Obviously that happens in regular retail real estate too.
Right.
But yeah, just understand where the money's coming from. Understand that if they don't have a down payment, I mean, that's a red flag. I'm not going to go sell a house. Some of my biggest problems with buyers are because they didn't really have enough of it for a strong down payment. And then, that showed its ugly head later on where it's like, okay, yeah, they actually can't afford this house.
Yeah.
So just having 20% down or 15 plus % down is a big, green flag, I would say. Anyone that's kind of running around, if they're in a rush, that's usually a red flag.
Yeah.
If they're like why did you leave the other place in such a hurry? Like they didn't really plan their life out. So you got to watch out for that. There's, professional scam artists that they'll, wedge themselves in your house and not pay you. So just being aware of who you're dealing with. Yeah. I try to meet almost every single buyer in person, or if I'm dealing with a partner, we'll meet them in person. Mm-hmm. So, the million things to watch out for.
Interesting.
Yeah.
Yeah. Okay.
That I learn new on every deal. Like I'm like, okay, now I know more on each deal.
Have you been burned at all before?
Oh yeah. I mean, I've been burned many times, but in which way? I'm trying to think the worst ways from an owner finance buyer.
Yeah.
Yeah, I'm trying to think of some bad ones. I mean, honestly, the worst is just not paying me, right? Like they're just like ghost me and they're late on payments and things like that. I haven't really been taken by an owner finance buyer yet.
Yeah.
Yeah. I mean, sellers are a little bit more scammy, I would say.
Yeah.
Like I've gotten sellers that are like, you're dealing with sketchy situations where they're like begging me to send cash app payments, of thousands of dollars before we actually close. I'm like, no.
Yeah.
So that I've been burned more by sellers than I have by buyers, for sure.
Right. For sure. Interesting. Have you been interested in anything else other than seller financing, owner financing, or have you just stuck with that?
I've mainly stuck with that. The commercial single tenant retail is really intriguing to me right now. I'm working on my fourth. I haven't closed anything, but I've attempted 3 and I'm now on my 4th. So I know more now what to watch out for.
Yeah.
That's for sure. Like where my mind goes when I have more time. Like if I decide to go chase something, that's what I'm hunting for. Mobile home park is fascinating. I mean, I didn't really intend to go into that direction, but, and it's, it's very hard to find deals.
Yeah.
I've been kind of hunting for them a little bit lately just cause I'm like, all right, now I kind of know a little bit about it and I feel like I can negotiate a little bit better when I'm buying. So that's a route I'm certainly willing to explore. But beyond that, it's just figure out a way to create the most possible recurring income with as little effort and as little money as possible. Yeah.
With all the different strategies that you see people online talking about investing, how do you stay diligent enough to just do that one thing?
It's really hard. Because I have shiny object syndrome pretty badly.
Yeah.
So I'll see stuff all the time and I'm like, that looks interesting. But luckily I have really good friends that are like, just keep doing what you've been doing. And like, there's I try to look for the home run, right? And they're like, just hit some singles, like keep hitting singles and doubles and they'll turn into enough, but it's definitely challenging. I mean, I'm just a naturally curious person, so I want to learn what's out there, but I know real estate pretty well by now. And I know how to make money with it. I know what the risks are better than I used to. So I'd rather do that than go. I'm not into crypto or any kind of crap like that. So sorry, it's not crap.
You're gonna offend some people.
And everyone just shut off the feed.
Yeah, that's awesome. How would you classify your level of risk tolerance?
Pretty high. Yeah, I'm willing to take a risk as long as I know, because like I said, I've done some deals where I'll pay an heir, and I'm like, well, it seems like a good bet, and I think it'll pay off in 18 months, maybe.
Yeah. So
I'm willing to do that, whereas a lot of people will not do that at all. But it's very, very calculated risks. So it may be very high risk, but I'm very aware of what the risks are. I'm not, if I don't know the risks, or if I'm dealing in a high risk situation in a niche I don't know about, I'm not going to do it, or I'm going to find somebody that knows pretty well, how to deal with the challenges that may come up.
Yeah. Have you ever sold any of your notes?
No, I came very close a couple of times.
Yeah. I'm
glad I didn't. It was one of my smaller notes that they owe me like $35,000, I think, or I don't know, somewhere in the mid 30s. I almost sold that note. I actually ended up buying that house back like a month after, which was totally random. The buyer paid on time every month for, I think, a year and a half. And they called me up one day. They said, hey, we're going to pay early this month, but this is our last payment. We don't want the house anymore. I was like, really? Okay. What do you want to do? And they're like, we'll meet, we'll sign it over. And I just I didn't ask too much. I was like, I think they're just going to sign it over to me for nothing. And then when we met, they wanted a couple $1,000s. I'm like, okay, worth it. Yeah. So I ended up paying them and then sold it for more. We originally sold it I bought the house for $7,000, sold it for $39,000, and then bought it back for a couple thousand more, and then sold it for $49,000 with I think $5,000 down.
Wow.
And that payer has been great. It's a 15-year note now. But so I almost sold that note before I got it back. Mm-hmm. And I think if I was owed, let's say $35,000, I think I was getting offers for like mid to low 20s. I'm like, no, I'm not doing that.
Yeah.
And I needed cash just at the time, but I was like, all right, I think I had maybe another deal came through and I was okay at the time. So didn't do that. But what I have done is, and I will continue to do if I need to, is borrow against notes, which is, there's all kinds of terms for it, but it's a collateral assignment of the monthly payments or a portion of the payments. So let's say I'm the lender, I'm owed the money from the buyer, and then I will sign an agreement with my private lender as long as they understand what they're dealing with, because it's a totally different kind of security.
Yeah.
They don't have a note and deed of trust. They have a collateral assignment that says, okay, Avi or my entity gets paid, let's say $1,000 so-and-so dollars, and I'm paying them $600 a month for a certain amount of time. So for example, I have one property we sold it $189 with $50,000 down. So I'm owed $139. Mm-hmm. And I actually had borrowed from a private lender when I first got the deal. We bought that house for, I think it was like $27,000. It was incredibly cheap. And so I still owed my lender, we spent a bunch of money cleaning it out and doing some things to it. There was dog shit in every square inch of the house when we bought it. You actually couldn't fit your foot in a space that didn't have dog shit. So we got the dog shit out of there. And so I owed my lender $32,000. It was exactly what it was. And so we paid off that lender, but I did it with a new lender. And so she signed a new 5-year note with me. I'm getting paid on a 30-year note, and I'm paying her on a 5-year note. So I think I'm about halfway through that one. So it was basically borrowing against the 139 or whatever it was, 139. And I still make a spread on it.
Yeah. It's so cool.
Yeah. It's fun. I didn't know anything about that until I talked to a couple of people that have done that. And most attorneys don't even know how to write that up. And I had to be like, no, this is what we're looking for.
Yeah.
And it's just a collateral assignment. Hypothecation, I think some people call it, where you're borrowing against. Yeah. You can sell. There's a lady named Tracy Z, who's really an expert in the note space. And I've learned a lot from her. I actually interviewed her also. Mm-hmm. She talks about there's two different things. You can either sell a partial on your note, which is a sale. It's a taxable event, or you can borrow against your note, which is not, no
debt.
No tax advice or anything, but there's different considerations on each.
Where are you learning all of this stuff from? Like if somebody was super fascinated by this as an investment strategy, what direction would you point them in?
So the true answer is anywhere I can get my hands on. So Tracy Z, I would highly recommend looking at her stuff. If you just Google search Tracy Z Note Investor, I think her website's noteinvestor.com or something like that. Mm-hmm. David Alexander is just a personal friend, and he doesn't have as much out there like content wise, but you call him, he's just a really good person, and will show you how to make money.
Yeah.
He'll also tell you exactly what he thinks. Like he won't sugarcoat his opinion. And if you're wholesaling, he'll tell you how stupid it is. Mitch Stephen has a ton of content out there with owner financing. So he's got, multiple books on owner financing and private lending, and just his whole series is My Life in 1,000 Houses. Mm-hmm. But he's a good resource, and he's got several podcasts that he's been a guest on.
Yeah.
The Uncle Carl is amazing in terms of finding deals. Like and anyone in the Charlotte, actually he's pretty much known around the country now too. But in terms of finding deals and structuring, creative deals with sellers, Carl is one of the best at it. I would say, where else can people look? Just basically just like look at who's doing it, right? Look at who's clearly, structuring deals in this way and just learn from them. And, you run into people and you're like, oh, never thought about it that way.
Mm-hmm.
But there's a ton of gurus out there that have content out there. And then just doing it, right? Like I learn a ton from each deal where I'm like, okay, I should have done it this way. Or, I look back at some of these we're talking about. I'm like, oh my God, I never would have done that again.
Yeah.
Because, I know more now about how to do it or what comes down the road.
Just know more is in a sense of how to extract more out of your investment, or just like red flags or.
Yeah. Extract more. And that specific comment was more like, okay, like I wouldn't have sold that house on Raccoon Run in Monroe for 140. I know, because now I've seen what the market can do. And I know, the longer you wait, what's the saying? Don't wait to buy real estate and wait. Yeah. So it's like, I know that I should never be in a hurry to get a payday. In terms of learning from people, there's so many people out there. And like you said earlier, I don't know if we were recording it or not, but there's like the hidden experts out there that like literally you never know that they exist.
Yeah.
I've been learning a ton from a group in Greenville, South Carolina. So a guy named Philip Klink is he's pretty active on Facebook and Twitter and all that. Mm-hmm. And he's just a genius thinker on how to structure deals, but he's involved with a group that does exchanging. So simultaneous exchanges. Yeah. And the way they structure deals is like next level. So I would highly recommend that group is led by a guy named Jason Dillard. And there's people in that room that you'll never see on Facebook, but they are some of the smartest investors in the country. Just for example, let's say here's one thing that they kind of taught me how to do. You go buy a house on terms from a seller. Let's say you have a portfolio, you've got some free and clear properties. You have a seller that is willing to sell you a house that, for example's sake, is $150,000. And they want it 150, but a cash purchase might be 120. Mm-hmm. You're like, okay, well, look, I'll pay you more than 120, but it's got to be on terms. But I can't get to 150. Maybe you agree on 140. And I'll have to use my calculator on this. But so they're like, okay, we'll do 140, 140 months for what is it, $1,000 a month? So 140 divided by 140 months is $1,000 a month. And let's say it's a good area, it's a rentable area for $1,500. So there's a spread there. Mm. If you can get them to agree to that note, which is a 0% loan, and you have a cash buyer at 120 if you need it, well, you can do a couple things. You can go owner finance that house and just make your spread on the one deal, or you can tell your seller, I'm willing to secure you on a property that's better value. Let's say I got a $200,000 house that's free and clear. I'm going to go secure your 140 against my nice house. Yeah. Good position. That's 70%? So 70% LTV, nice house. It's rented or it's cash flowing. And now you have $1,000 a month that you owe them at 0%. Well, I've always just thought, just deal with the one house, one seller. What they're saying is go sell it to a cash buyer at 120. And now your numbers on that, $1,000 a month for 140 months. And you just got back 120 cash. Remember, you still owe 140, but you're going to just pay that through maturity. Now you're 120. You effectively just borrowed 120,000 at 2.7%, which you can't do from a private lender. Wow. So the key from what I'm taking away from them is don't go to private lenders. Just go to your sellers and go to your like regular people that don't need a 12% return or a 10% return. And so I was like, holy cow, I didn't think about it that way. So
the key to that is having another property that's free and clear. Or do you collateralize it against like a portfolio, or
just
you have to have
one
assets?
property? Yeah. It's that to make that example work the way we just went through it, you have to have another property that's free and clear. I'm sure there's other ways to structure it, but the safest way for the seller to be protected, is to have them secured against something else.
I mean, you could be a bad guy.
And
put it in second position, or there's probably a lot of bad actors out there.
There's a ton of ways to not do things right. Yeah, you have to have high integrity. And good ethics if you're going to do that, because you're dealing with people's money, and just treat people's money better than your own.
Of course. Who've been some of the most strategic relationships that you've had that have helped you get where you are today?
Oh man. I mean, every single private lender I have, so I have a small handful of 8 to 10 people that I go to all the time, and, very sharp people. They've made their money for a reason. So partners and JV partners like that. Some of the people I already mentioned, with the owner financing business, our trustee that I use, the guy that is basically the brains behind the trust business. Yeah. We put all of our properties in a trust, and I pay a company to do that. Mm-hmm. And the guy that runs that, his name is Jeff Hatcher. He's a very, very sharp guy. So he always has my best interest in mind. Like, he understands what I'm trying to do. So he's helped me structure a ton of stuff with IRA deals, that just, I didn't think I could do. He's like, no, I know what you're trying to do. Here's how you structure it the best way. Yeah. For example, that deal with $500 a month. So the reason it was interesting, it was 28 months, $14,500 a month. The reason that was a nice deal was because it was 0%. So my IRA company was like, oh, well, yeah, we can send the seller money, but it's going to cost you like $35 a month every time we send money. I'm like, well, that doesn't help me. Like, I don't want to pay $35 extra because now it's not a 0% note. Yeah. So Jeff's like, no. So my mind was like, well, I probably have to give the seller more upfront or something, which defeated the whole purpose of getting a great deal structured in the beginning. Yeah. So we said, so Jeff goes, no, just go have a third party company that manages all the funds, give them a contingency fund of, the other challenge was I only had a few thousand. I had like 7,000 in a brand new Roth account. Mm-hmm. So he said, give them a contingency fund of 5,000 up front so they can start making payments, like, without having to worry about you selling it right away. And then when you sell it, your owner finance buyer is going to cover all the payments. Mm-hmm. I thought what I had to do was just pay all cash. And I was like, well, shit, I only have 7,000 here. I need to pay 7,000 with my IRA, 50%. And then my other 50% would come in from me. And so I was like, well, I will only get half the benefit. Yeah. So anyway, that's one example.
So you're just using a servicing company to.
It's technically just like an accounting business, but they're not like a licensed note servicer or anything like that. Mm-hmm. They're not a debt collector, but it's a company that will collect and disperse and handle all the escrow payments. Yeah. Yeah.
Cool. I love the model. I mean, I've dabbled in it a little bit here and there, but it's great. It hasn't been my main focus. Okay. But it does allow you to capitalize on deals that wouldn't work otherwise. Absolutely. Yeah. Yes.
And that's exactly right. I mean, especially in the subject to world where you've got, you can't make a cash play work, and that's one of the best high yield investments out there. Absolutely. Go give someone a few $1,000s to take over their loan, go get a big down payment. And that's, you can multiply your money very quickly.
Yeah. Very cool. Yeah. Okay. Looking back on your career, minor league baseball. Okay. To where you're at today. How has real estate changed your life?
Oh my God. I mean, it definitely gives me the time to do whatever we need to do with, my wife and kids. It's amazing. Mm-hmm. I don't have to, it wasn't always like that, right? Like, there's times where I would work way more hours than a W-2 job, right? I was working, and there's still times, like, if I'm working a foreclosure deal that's got a tight time frame or whatever, I'm going to work through that with blinders on. Yeah. Yeah. And my family understands that. Like, if I'm taking a call from some deal that's urgent, but right now it's been great. I have in a position, thankfully, that I don't have to stress like I did working for somebody else. Mm-hmm. Just kind of building my portfolio one note at a time.
One note at a time.
And, it's changed tremendously. It's, I'm very, very glad I found real estate. That's for sure.
Yeah.
Yeah.
Awesome. Well, if people want to keep up with you, how do they do that?
They can just call me. I post on Facebook every now and then. I try to be semi-active in Facebook groups. I used to be more so than now, but like any Charlotte real estate investor groups I'm in. But I can give my cell phone if people do that.
Don't do that.
Don't do it.
I don't know. You can
if you have an amazing deal you want to sell for half price.
Any $16,000 houses in Gaffney.
Yeah. No, I don't mind.
Yeah, go for it.
Yeah, it's my cell phone is 832-928-7525. And I'm sure a very respectful audience. Like I would love to connect with people. You're a very, very respected investor in the area. So
thank you.
Yeah. Anybody that's, following your content, I'm sure admiration for, but yeah, if I can help anybody in any way, I would love to.
Awesome. Good deal. Well, thanks for coming on, man.
Yeah. Thank you for having me.
Yeah.
Been a pleasure.
That's all we've got for today's show. If you loved the content, please leave us a rating and review. It really helps us grow. If you want to follow along my journey as a real estate investor, you can go to builtforwealthpodcast.com and you'll find all of my social links there. Thanks for listening. Nailed it.